This episode is brought to you by Mortgage Workflow Partners and the Mastering Encompass series, both for users as well as administrators. You can find out all the information about it over at masteringencompass.com. Also, if you'd like to check out what we're doing on YouTube, go ahead and subscribe to the channel using the @MasteringEncompass handle. And make sure you stay up to date on all the information, not just with podcasts, but also video content that we bring to you as often as possible. Now let's get on to the episode. Hey everyone, Larry Bailey here with Mortgage Workflow Partners, bringing you another weekly update with regards to what's going on in the marketplace. We're going to review what happened in the week of February 17th, 2025. As always, this is brought to you from the Mastering Encompass platform. Guys, if you use Encompass, you want to head over to masteringencompass.com. It's free to join. Check it out. You're going to learn a ton of information, especially with the 25.1 release coming out in just a few weeks. Go through the class that explains all of the different products that are getting updated. Again, it's free. Check it out. Let's get into what happened. We've got the sales of existing homes decline in January, but are projected to increase throughout this year. Meanwhile, concerns over tariffs, of course, have led to home builders to adopt a more cautious stance. Here's the stories that we're going to be going through. We've got existing home sales expected to improve this year. The next story is home builder confidence declines amid tariffs concerns. The next story is construction activity slows in January. That's followed up by jobless claims. Data continues to show a consistent trend. We've got a family hack of the week in there, and then we're going to talk about what to look for this week. The existing home sales, they're expected to improve this year. That's the idea. And the basis of this is that in January, the existing home closings decreased 4.9% from December to a 4.08 million unit annualized pace. This is slightly missing the projections. However, sales have risen year over year for 4 consecutive months, and inventory saw a modest uptick. So what we think is that this was a strong January report, of course, but considering it measured home shopping from November to December when rates were elevated, plus January typically in the United States is a slow time for the housing market. Quote, things are looking up, close quote, according to the National Association of Realtors Chief Economist Lawrence Yun, who expects home sales to continue rising as rates and prices stabilize. While January inventory improved to 1.18 million units, it remained tight compared to the pre-pandemic levels. Plus, only 829,000 of those were active listings. The rest, those were already under contract, so they weren't truly available. The ongoing supply shortage combined with pent-up buyer demand bodes well for continued home price appreciation. All right, so let's get into the next story. This is all about home builder confidence declining amid tariff concerns. And we see the image on screen. By the way, if you're listening to us on podcast, thanks very much. Head over to masteringencompass.com and you can check out the full video. How's that? So here we go. We've got home builder sentiment took a hit in February with the National Association of Home Builders, that's the NAHB. That reported a drop in their confidence index from 47 in January to 42 in February. This figure now is well below the neutral benchmark of 50, signaling contraction. Remember, it's the 50 is that middle mark, right? Above is growth, below 50 is contraction or negative, positive versus negative. All 3 components of that index, that's the buyer traffic and the current sales and the future sales expectations, they decreased, with the future sales expectations seeing a significant 13-point drop to their lowest level since December 2023. The bottom line in this story is that the NAHB's Chief Economist Robert Dietz also noted that the decline was driven by uncertainty over the, quote, scale and scope of tariffs, close quote, with 32% of appliances and 30% of softwood lumber coming from international trade. However, the survey timing appears to have impacted the results. Responses collected before the announcement of a 1-month tariff pause on goods from Canada and Mexico, they recorded a lower housing market index, that's the HMI, of 38. While those gathered after the pause produced a higher score, 44. So we see this influence, right? This suggests that the decline in sentiment beforehand could have been a less severe with different survey timing. So there you go. We're going to keep on trucking here into construction activity slowing in January, and we saw housing starts decline by nearly 10% from December to January, with decreases seen in both single-family and multifamily construction. However, the December housing data reflected one of the strongest levels of activity in 2024, providing important context for the January decline. Meanwhile, building permits, which is a leading indicator, that rose slightly to the start of the year. Bottom line here is the NAHB's chair, that's Carl Harris, noted that, quote, high construction costs, elevated mortgage rates, and challenging housing affordability conditions are causing builders to approach the market with caution, close quote. This also suggests that home prices will remain supported as insufficient supply is coming on the market to meet demand, presenting an ongoing opportunity for wealth building through home ownership. This next story is all about jobless claims data showing it continues to show a consistent trend. So the initial jobless claims increased by 5,000, totaling 219,000. Continuing jobless claims also rose by 24,000 to 1.869 million, remaining above 1.8 million for the 37th consecutive week. When's this going to end, right? The bottom line here is the latest data suggests that while layoffs remain low, the labor market continues to encounter difficulties in promptly reintegrating job seekers. Additionally, as many individuals are eligible for benefits for just 26 weeks, the rise in continuing claims upon benefit expiration points to persistent vulnerabilities in the labor market. Here's a family hack of the week, and if you want to check out this recipe, which is all about February 26th being the National Pistachio Day, making these white chocolate pistachio cookies. It's a perfect way to commemorate the occasion. There's a recipe here on screen at this point in the audio. If you're checking this out via podcast and you're interested in this recipe, head over to masteringcompass.com and check it out on screen. You can pause it, snapshot it, and go make them cookies. All right. So here's what we're looking for this week, gang. The key report this week will be published on Friday, highlighting the Federal Reserve's preferred inflation gauge. You know it, our favorite, the Personal Consumption Expenditures Index. So we'll see what happens Friday. In addition, the housing data will be released throughout the week with appreciation figures on Tuesday, new home sales on Wednesday, and pending home sales on Thursday. Thursday will also include the latest jobless claims and the second estimate of the fourth quarter GDP. Remember, there's three estimates for the GDP. You've got the initial, you've got the second or revised, and then you've got the final, which is the third. All right, gang, that's it. My name is Larry Bailey. Thanks always for listening to what's going on in the marketplace. We'll catch you on the next one. See you now.